What a day in the financial markets. Come on in. I just want to kind of shed some light and some insight into what's going on. So, what is really going on with the stock market, the financial markets overall, the economy overall, is these are volatile times that we're living in. And quite frankly, they have been volatile. So come on in because I really, really hope that the folks who actually attended our masterclass this past weekend, which by the way was Become One of a Million with a Million, how to invest during volatile times. So come on in, everyone. I'm Deborah Owens. I'm founder and CEO of WealthyU, where we teach women how to build their investment portfolios to seven figures and beyond. And this week, on Saturday, I mean, it seems like it's light years. Time is moving so quickly. But this weekend, we had a 4 hour masterclass where we really did a deep dive into the financial markets and how they work. And one of the insights that I was sharing with the attendees is what I learned very early in my career, a career that spans over 2 decades, almost three, in the financial services industry. But, my greatest lesson really was gained uh, almost, the first few months I started working as a sales assistant at Merrill Lynch. And here's what I want you to know is that don't just listen to what people say, watch what they do. And as someone who didn't come from wealth and sort of found myself in this land of the ultra wealthy, um, what I did was simply observe, and I really feel like I had a distinct advantage not knowing what to expect and just being curious. So, here I am, this young, very young woman giving quotes on the phone. Back in the day, we didn't have PCs, we had the Quotron, which really is how Bloomberg, you know, an invention by Bloomberg, and the rest is history. But at any rate, I digress. I'm sitting at this receptionist desk, and the phones are ringing, and I'm giving quotes. And then shortly after that, we had the stock market, one of the, Black Monday. So yeah, it has been over 3 decades, right, in the financial services industry. And all these people were panicking. And I have felt this fear or observed this fear recently, during COVID when the market dropped significantly. And now, I mean, the indexes are down today. They're in one day, they're down 3%. The Dow was down 800. Let me just check my numbers for a minute. So the S&P 500 was down 117 points, 3%. The Dow was down 880 points, 2.73%. And then the NASDAQ was down 400 points or more than 8%. I'm sorry, not 8%, but over 4%, right? And so, what I observed during that time was that the, people who weren't ultra wealthy, they panicked and sold. Whereas what I saw with some of the most affluent, wealthy clients was that they were buying investments. But here's what I want to preface is a lot of times people say, oh, stocks are on sale. Well, not all stocks are on sale, right? Well, like, you really want to look at and analyze and see, what are the stocks that are going down, not because they're having issues with their earnings or revenue is lower, so they're laying off people. But you really want to take a look at what are the companies that are going down just because there are more sellers in the market. But the point I really want to make is now is when you understand what your risk tolerance is. But the most important thing you can do right now, as opposed to responding or getting fearful and saying things like, I lost money. Now, oh, I'm losing money. I'm losing money. Well, yes and no, right? Like the value of your investments has declined. And I want you to think of it in terms of, like our home values, right? You don't say, oh, my home is declining, I need to sell it. No, because on any given day, values can change. But the most important thing you can do uh, when investing in volatile times is just really have a clear sense of how much risk you want to take, number one, and how much, if the market declined by, let's say, 40%, are you overexposed in terms of being invested in stocks? This is when you know whether you are. But the most important thing that one of the other things that I won't say, I don't want to say most important because I've said that a couple of times, but one of the other things that I want to say during volatile times is that for the average person, most of your investments are in your employer sponsored retirement plan. And most times you're contributing to those retirement plans, monthly. And so you're buying the shares of your different investments, mutual funds at different prices. And if you really are not going to need to have access to the majority of your funds within the next, 5, 6, 7 years, then look at this as the opportunity that it is, the opportunity for you to now continue to accumulate shares uh, at lower prices. I mean, there are a number of macroeconomic, what do I want to say, factors that are driving the volatility in the stock market. So much of it is pure uncertainty from COVID. And in addition to that, the stocks, we've been on quite the tear for the past few years. And sometimes share prices get ahead of themselves. And so that's basically what we're seeing. And so the point I wanted to make as it relates to investing during these volatile times is lean in, learn a little bit more about what you're invested in, and look at how your investments are performing during these kind of volatile times, because that'll tell you whether or not your investments are, you're overexposed. And finally, I wanted to hop on and talk to our members in our WealthyU community and say that, guess what today is? Today is the deadline for joining our WealthyU Society. So it's our deadline. You've got till midnight to join the next cohort. And what I want to say is I can't think of a better time for you to be in a community learning more about what your investments are, how to do proper asset allocation, meaning how different eggs in different baskets, and to be with other like-minded folks who understand that really the way you build wealth is being able to stick with your strategy during these kind of volatile times. So, uh, in closing, right? The market is going to go up and down. It always has. It always will. But no other asset class has outperformed stocks, and that's a fact. Not real estate, not gold, not Bitcoin, none of it, not the historical returns of investments. And so, in order to build wealth, you have to be able to deal with risk. But here's the final thing I'm going to say is, do you know how you de-risk your portfolio? How do you de-risk your portfolio? With knowledge, right? Because with knowledge, you can make decisions from a position of strength and not fear. So I hope that was helpful to you. Some of the lessons that I've learned in my investing travails. And again, I'm Deborah Owens. I'm founder and CEO of WealthyU. If you want to learn more about what we do to de-risk and educate our community, check us out, wealthyu.com.